All right, what's going on? Finally got the new setup, so we are all set and ready to go here. Hopefully the mic is all right. If you would just give me a shout, let me know this mic is all good, and we'll get going here. Let's just come on over. Somebody just please do me a solid, drop a comment so I know I'm this. I think it should be all right. I'm just waiting. Somebody give me the green light, please. Oh, sweet. All right, good. We're good. Thank you for that, Sean. Yes. Computers in, new desktop, new mic, soundboard, keyboard, everything. We're all set. Great. What's going on, Bams? What's up, Mitchell? How are you? All right. So, just to get into it real quick, let's go right into it and not waste any time here. Our charting. Now, if you guys have any names that you want to go over, feel free to put them in the chat right now, and we'll get after it. Okay. So, first of all, yeah, the mic should be much more crisp. But yeah, so I'm making the switch over to PC. You'll probably notice that it's a lot more smooth, and it's not gonna take an hour and a half to load up and stuff like that. So that's always a plus. Now, as we continue, obviously, feel free to drop any names. We'll go through the chart also. So I just want to make sure that everything still looks smooth and all of that. So, but anyways, we'll get off to a jump start. Now, obviously, as always, start off in the weekly, but we will crunch it down a little bit as well. So just this week so far off to a pretty good start. Now we'll look at this previous swing high that we broke through on the previous price run. So you'll look from our previous, whoops, not that, ready, right here. Look from our low to our high. Here we also had a bullish fair value gap right here. Price runs through, model complete. So now from this point, I would then simply just move my fibs in a way in which it's going to line up with our newest price run. Do I know this is the high? Not necessarily. Week's nonsense completely to me at this point is to reach back up to the low of this candle right here at 16,938. If you do that, you prevent a bearish imbalance on the weekly candle from forming. So at that, now on Thursday, we have CPI that could absolutely give us a little bit of a jolt to the downside. But just for now, where we're at is not all that bad. And we can kind of see how this shakes out from here. Tomorrow, I don't think it's going to be the end of today was. This morning was fine. The end of the day, we kind of got stuck in the mud from, on. But I bring this up first, the weekly, because you'll notice that on this weekly chart right now, we are not near discount whatsoever, right? So with that being said, we just to try and be a little bit more precise, we could take a look over at our daily chart. And if you take a look at the daily chart here, you will similar type of situation where we had our high taken out here with that price run here. Okay. So while we got here and we got that red candle, right? This is if you want to jump in and automatically want to short that first red candle because you think this is the top, we are going down from here, and you don't wait for some sort of confirmation. That a lot of people like to use, but they never give any context to what they're actually saying. So I will. So when I say I want to see confirmation that a range is set, all I'm really looking for at this point is that we're going to create some sort of imbalance candle down. Once I see that imbalance candle form, then to me, looking for price to retrace into discount, right? So there's no imbalance created here, right? Let's go to the next red candle. No imbalance created here, right? You see, nothing. Okay. As we slide to this candle, look what happens. We form our first imbalance to the downside. And what does that show you? There's your discount retracement, right? So that confirmation. If I'm not going to just jump into the trade, because look, each time you did this, what happens? 2 candles later, you're stopped out if your entry was already at the high, right? Let's say even if you pinpoint nailed that, right, off that high, still you wouldn't grieve for a little bit, but if you were to hold that any longer, you're getting stopped. Similar situation here. Big candle to the downside, but guess what? Price continues. Now, in this case, when the imbalance was formed, we did have a breakaway gap, okay? Untouched, right? No test into it or anything. So now, as you can see, I do have noted right here our showtime imbalance. And what I mean by that, and what I mean by showtime imbalance in the first place is at this point, and I tweeted this the other day, but off of this imbalance here, I'm pretty neutral at this point. And the reason why I say that I'm neutral, right? You might say, oh, well, Mando, we still have a bullish structure here, man. What are you talking about, right? It still doesn't line up perfectly with what we just looked at on the weekly, right? On the weekly, we're nowhere near discount. So to me, I got to be a little careful here, right? What ultimately I think the draw on liquidity or where we're going is still higher, but I gotta respect this just for now and just be neutral, because I can absolutely justify a move in which we see a run towards the highs, right? This would be our draw on liquidity. This is our discount imbalance. This is the Mando model, right? Now a rejection from this imbalance right here. And guess what? I can totally see us going down here. Why? Okay, well, here's a couple reasons, I guess, just for short, right? So the first thing that I always talk about is, when might my model not work, right? Because if my model worked every single time on repeat, and you notice that it over and over and over and over and over again repeats, right? Price would only go in one direction. For example, ready? Here's our first one. Rip to new high, discount retracement, new high, discount retracement, new high. And it would just continuously doing that. So at some point, my model is not going to work, right? Now, what is a time where we can look for my model to not work? And in short, if we're taking out higher time frame liquidity, so have on your daily, on your weekly, I'm not talking about an hourly high. I'm not really talking about a 15-minute, 5-minute, none of those highs. Those are often internal range liquidity, but I'm talking about external range liquidity, aka buy side. So after taking out this higher time frame high, this is a daily, and this, but upon that retracement back down, I know we took out liquidity here. So I got to be a little cautious, just because my model might not work in this situation, right? And on the flip side of that, if we look specifically at the daily chart, you're going to notice that there's a I not only do I show people, but it's also an ICT concept where you have a high, low, higher high, a break below this low, and you have something called a bearish breaker. Okay, so when you have a bearish, my box here, it is. Okay, so the entirety of this candle, I know it's a huge range and it's not very tradable, especially if you're trading on NASDAQ, that can rip your face off. But this would be your bearish breaker, right? So currently we are inside this breaker while all price swing, right? You can look at it and say, okay, we took out this low here with this price run. Price is now in the 62 to 79% range of your, this would be your model, and your expectation here would be lows, right? So that's why when you, it's way too clearly. And if you want, I'll give you my, bullish bias here, I guess you could say. So really, just a continuation move, low to high. We took out that higher time frame high with this price run. Here's our discount retracement, and you'll also notice how perfectly we held previous buy side liquidity. So to me, that would show me some aggression or urgency to move higher in that situation, right? So if that's the case, I need to look, and I mean, it looks even cleaner here, right, with that recovery, but I need to kind of chill, right? And that's, if you can give way too good of an explanation on two sides of a trade, then it might not be the trade that you want to take, right? That's just the way I feel about it. And you might say, well, there's a lot of times where I'm crossed up like all the time in the trade. Well, over time, I think to see more charts and see more of these setups play out, with time, you will be able to start to pick up on what would be a higher probability setup versus a lower probability setup, right? So could I try and front run this? Because I still do think we go higher. I'm just not so sure if we go higher immediately or we go higher getting down into discount of our weekly low, right? So I don't know, everybody might, you could say, oh, like that, dude, you're supposed to know this. Like, are you kidding me? I think I would just always prefer to keep it real and just tell you that at this point in this specific imbalance, this will tell me because going forward, if we are to reject from this imbalance here, I'm going to feel pretty good about routing, uh, shorts down to discount of our weekly range. But on the flip side of that, if we were to break above this level here, to me, this 17,165 is next. And ultimately, our 17,700, which is our adjusted all time, or unadjusted, I'm sorry, all time high dating back 21. So that's just the way I'm mapping my game plan for now. For anybody that was live trading with us today, that it, really didn't do all that much. And timing was a factor, of course, but the reason why for a day specifically like today, my bias wasn't heavy on either side. So really, even when I was scalping, and I guess I could show you the exact move that I took, but when I took this trade off of the bullish imbalance or bullish breaker on the 15-minute time frame here, my stop out was relatively quick, actually, believe it or not. So while I did end up catching 40 points, I didn't, because I didn't feel all that great about a continuation move today. Because even if we were to break it down into a smaller time frame, this is what we had going into this is what we had going into today. Ready? Boom, boom. Okay. So ready? Here's our low from yesterday that created that imbalance move higher. Oh, whoops. I don't need that actually. Let's just slide it down. This is the range that we had from yesterday. Here's our retracement, not into discount, right? So ultimately not a trade that I'm typically looking to take in the first place anyway. But that breaker right there in conjunction with this relative equal high is kind of the telltale sign for that up move up in around, it was around 60. So right around here, that was where I ended up taking profit right off of this bearish fair value gap. Now, could I have held it and been more aggressive? Absolutely. But again, the reason why I wasn't, I really was on the wrong side of things in terms of where I thought price was ending up point in the day. And that happens. But that's why, to me, securing wins whenever they come, or being aggressive with wins whenever you hit a certain threshold. For me, it's 20 points. And the way I look at it is, if I'm trading NASDAQ and I hit 20 points 3 times, that would be, good enough for $1,200. I hit every day, but it's something that I strive to hit every day. And if I can do that, and simply on 3 trades, usually these trades take 5, Whoa, whoa, whoa. Hopefully you guys are still there. Holy crap. Yeah, this storm is ripping outside here. Um and that and that happened. So yeah, it was the connection. I got wiped for a second there. So if it cuts out again, I apologize for that. Um let me just type back into the group and let everybody know. Uh whoops. All right, we're back. So hopefully this is all good. If you can hear me now, that would be great. Just shoot me a message. All right, thanks, Katie. All right, so let's share again. Yeah, it's really raining and the wind is whipping, so I really don't expect to have connection for all that much longer, but we'll see. We'll see how it goes. Um, all right, so let's screen share again. Sorry about that. I don't even know where out NQ and kind of where or how I'm anticipating everything move next. So that's for the info on NQ. It might just be on my side. Oh, okay. I'm sorry. Yeah. All right. Well, I'm glad everything is good. So if you guys have tickers, please throw not. I'm just gonna start running through a couple of these names, and we'll get rolling. I know not everybody trades Nasdaq, but oftentimes the stuff that I'm talking about on Nasdaq will apply to SPY because I know a lot of you guys trade SPY. Very similar. The only difference, really, the reason why I pivoted because I used to only trade the S&P, but the reason why I pivoted really, probably midway through last year, was because with NQ, I felt like NQ was leading the way for most of the year, and SPY was a little bit of a lagger. I pivoted. So, all right, cool. Yeah. So let's see. Great. BAMS with the Apple. We can definitely check out Apple. So let's go over. And again, we will, we'll reverse engineer this until once I start seeing a lot of requests come in, I'll probably not give as in-depth detail. All right. So Apple. Here we go. So this is the weekly. We'll go back as well. We'll go through the daily and everything like that. But if we take a look right off the bat, you'll notice just another situation where too high. That was the price run that took out all these sets of highs right here, right? Now on that discount retracement, here's our first attempt. And this is kind of what we could see on NASDAQ. And, I wouldn't favor it and I don't really want it to happen, but where we get our first low into discount, the second low forms that turtle soup or bullish breaker, and we get our rip up and through. So my model would have completed right off of this wick, right? And somebody had asked me the question today, actually, that when you point, really, what's next for me is I need to wait. It stinks, but if this candle is to create an upside imbalance, at that point, I would feel pretty good about a continuation move or a, quote unquote breakout, right? But if we take liquidity at that point, I would expect another one of our discount retracements, right? In which we can simply just look to do exactly what we did last time, right? So that's our price run. So from low, and I would anticipate a move higher here. Now, the only tricky part about Apple, just like NASDAQ, just like SPY, is that the fact that we did take out higher time frame liquidity, this is actually all-time highs, if I'm not mistaken. Yeah, it is. So by taking out that higher, at this point, when would my model or when could my model not work? I don't want to say when. It does, but when it could not work is after taking out a higher time frame high, and which we did. So at this point here, we obviously bouncing so far out of our breaker. I would anticipate price to to this bearish volume imbalance or gap down, and from there, again, just like Nasdaq, how I had that kind of in between.